All right, welcome back, everyone. First off, I want to say that the Doge community is growing. If you don't know by the title, we're going to pull it up here in a moment, but we've added roughly around a little over 800,000 wallets in the last few quarters, with last month being our biggest month of wallets that now hold Dogecoin. So this is very indicative on the growth of the overall community and the people that are obviously bullish on the coin. So this plays a factor into the pathway that we have to take as far as to getting to a dollar, because outside of utility and the amount of people who hold versus whales, all that kind of good stuff, the community expanding also plays a big part, and that also removes a lot of those coins from the exchanges and the more so holding them in their own wallets, which increases the amount of coins that are removed from the overall market cap or market float, coin float, whatever you want to refer to it as. That removes that and it puts it into the hands of the people. So there's less coins out there circulating. So there's a domino effect depending on how big the community actually gets, and that pertains to actually shorts, the utility where they're being held, all that kind of good stuff. So it's a huge benefit when the community is growing. And also, you want to make sure that the community is growing because that shows interest as far as for the relation to the people, how many people are actually bullish on it, whether or not they believe in the coin. So for Doge to be, 10 plus years old and still growing at that rate at the turn of a market, it's really, really indicative as far as what's going on. So right now, I think we have in total of around 6.57 million, or we're approaching 7 million wallets, up from 4 million wallets at the last bull run, and we're only in the first quarter. So I expect this number to grow. We've added 60,000 wallets in March so far, but again, we're going to take a look at that. And in this video, we're also going to take a look at the acquisition methods that can kind of help everyone stay green and stay in profit as they make this adjustment through the markets. So first off, before we get into the video, I made a poll on Twitter and in my community section on YouTube, and I asked if you were green or red, basically, in Doge, and I wanted you to vote to let me know where you stand. I'm kind of getting an idea. Right now, we have over 300 votes in between the two, and the majority of the community is green. And I suspected that because when we were charting the bottom of the market and how Doge rallied from around the 6 cent range at around 100%. Return basically every time since we had the initial bull run. I mentioned that was the golden zone, and we've had many discussions and videos in that over the years. So I imagine that most people would have a lower DCA, even if they bought at the height of the last run. They've had opportunity to bring it down, and so I believe that's actually the case, and that what everyone has done. So that has worked out absolutely amazing. But I want to kind of get a feel for the market. So if you can, make sure you vote on those polls in the community section and on my X account as well. So with that being said, let's take a look here at the article. Now, of course, they're titling this as a roadblock, but the truth of the matter is people buy when things are up. So right now, if you take a look at all the wallets, I imagine that the amount of people that's adding new coins to their wallets is down because the market is red, and we have the halving coming up, and that's going to people typically, for psychological reasons, they like to buy green candles. So when the market is red, no one wants to buy, but when it's running, more people want to buy. I promise you, more people are going to be willing to buy Dogecoin at 25 cents than they are at the prices now. And then when we have a floor, or when we break a floor, and it's like, hey, this is a great opportunity. We just broke a floor. This is a great opportunity to kind of catch some on the dip. They're like, it's red, it might go lower. But when it's green and you're about to break a ceiling, and it's like, okay, well, wait for a pullback. It's like, no, we might miss out on the gains. It's probably going to keep going up, and then they'll buy that. So it's a psychological thing, but that pertains to the wallets being open. It's not necessarily indicative on how the community actually feels about Dogecoin. It's more so about how they feel about the price of Dogecoin. So if you take a look at that, you'll say that we added 60,000 wallets. At the start of the month, we had 6.51 million. So now we have increased to 6.57 million. We go back to some of the older coins here, and it was talking about like Pepe or PP again, however you want to call it. It still has less than 200,000 wallets year to date, and even though it's increased 370%. And Doge is ahead as far as for new wallets. Doge is ahead of Sheeb and PP. I'm gonna quit calling it that. I know it's for the most part, some people call it like Pepe, but I would call it PP. for a number of reasons, but I don't want to get any battles in my comment section about not liking certain coins. So I'll leave it alone. But there's another section on here I wanted to find. I put the numbers on my. Oh, here we go. So in January and February, added over 400,000 wallets. I think last month, and it's had an increase of 450,000 wallets. So it went from 592 to 651. And yeah, so right now we're total at 6.57. So again, I think this really just aligns with the expansion of the overall community and how the community is growing. Don't let this be a deterrent, because they're going to word it certain ways, but just know that the amount of people coming into the coin is absolutely related to the price of the coin. I guarantee you, if Doge went to 50 cent this week, this will be the biggest month of wallets added for Dogecoin in the history of the coin. I can promise you that, because people chase green, they chase hype, momentum. It's that shiny object syndrome, especially now in the market's red. If you have a push and something's green, it's going to be looked at as like a raft or like a lifesaver, and they're going to run towards green. So that it's just a psychological thing. So don't let that be a measuring stick going forward. So let's take a look here at the charts, and we're going to talk about how some of the good ways you can kind of take advantage of these and better structure your portfolio, since most of you are green. Okay, so right now you're looking at, that's actually market cap. Go to dollars here. So the biggest thing right now is we are probably going to close back up in this zone, because typically this was the previous trend. So all of these trends are typically, even when they're broken, because all trends are broken at some point, but even when they're broken, those levels still have significance. So even right now, you'll see, okay, well, why is Doge bouncing off 12? But and back into the 13s, because historically, even though on the last run we absolutely blew through 12 cent and did not have any trouble not consolidating there, that level still has some significance based off of the total amount of accumulators and where they're comfortable buying. So a lot of people's averages are more than likely are around 12 cents. So when it comes into play, whether or not we stop there on the way up, it can be that flip between that flip between floor and ceiling, resistance and support. And that flip there, people are comfortable entering in that position, so they will buy and return. So instead of us flowing through it, we actually bounce and go back up to around like 13 cents, which I believe is what's happening right now, even though we didn't stop there before, because typically you'll see it is when we break through a floor here and it doesn't hold, then we typically have a change in momentum, because the issue here is Doge has now done this twice on this run. So on this leg here, on the front way up, we were supposed to have a ceiling, some resistance here at around 12 cent, and we blew right through that. And then on the flip side, we were supposed to have I'm not going to say we're supposed to, because it was supposed to be, we rejected off of it 5 or 6 times. So I can't say that this is a weak floor, but we had a very strong sentiment in this floor, and then it breaks through that. So it literally did the opposite, where I'm not stopping at 12, but then it says I'm not stopping at 15. So we're having these really interesting swings here, but it's still showing respect to both, because when we had the consolidation, it consolidated and it gapped back up to 15. And even though it didn't stop at 12, now it's using that 12 range as support and bouncing off of it. So this kind of just puts you in a position here to say, okay, well, what's the best way for me to accumulate? What's the best way for me to be in this position? I'm green now. Most of my followers are green. I'm really proud of that, as a matter of fact. But how do I stay green and add to my coin count? Because at the end of the day, the multiplier at whatever number you want to take profit at or trade into another coin at, your coin count is what's going to matter the most. That's going to be your multiplier of profit, right? So the best thing to do, and let's use this scenario here. I kind of wrote it out. If you were buying $1,000 of Doge at 10 cent, you would get roughly around excuse me. And if you buy $1,000 of Doge at around 10 cent, you get roughly 10,000 coins. $1,000 of Doge at 15 cent, you would get around 6,666 coins, right? Let's say your target to sell was around 70 cent. Excuse me, I'm looking at my notes here. That would be a difference between 7,466, a difference of $2,334, right? And you're saying, okay, well, I would like to time it as low as possible. And see, the thing is, a lot of people, the issue with, I'll say retail for the most part, the biggest thing is people say that they're going to sell at a certain number, but because of the momentum around that number, they don't end up usually doing it. It takes a lot of discipline to actually do that because you're going to take a look into a lot of things like the news coming out, the momentum that's going on. If we're doing, God candles, all that kind of good stuff, you're going to say, I can probably do better than the 70 cent. And that gets you, and it potentially can get you into trouble, or it leads you into frustration or panic selling. A lot of things that go on here. You'll see that happens overall across the market, because even though most of my followers are green, some of them that are red, depending on where they bought, these types of swings lead them to panic selling. They'll say, "Oh my God, it's going to go back down. It's going to consolidate. It's not going to come back up." Meanwhile, we're 3 weeks into the bull market. Like if you're looking at something that normally lasts well over a year, and you're 3 weeks into the market saying, "Oh, it went down 3 cents," you're a bag holder or whatnot. It's just an incredibly ignorant comment to make. Like, just look at the difference in communities and things that you see for something like a Doge and then like a Bitcoin or Ethereum. They know what's up. They know they're taking all of this as an opportunity to build, strengthen their portfolios and run. And we have to kind of keep that in mind. What are we expecting from this coin? We can't have I don't mean to go on like a rampage here, but we can't have say that we're long term, but then have a trader's mindset, a day trader's mindset on the coin. Which one are you? Now, if you're day trading it, then yeah, if you bought at 20 cents, it goes down. Yeah, that you should be upset because you're day trading a coin. If you're long at a coin saying, "Hey, I'm going to see where this bull market goes. This is where the utility is at," then that 2 cent really doesn't matter. Like no one's doing that with Apple or Microsoft. You have to kind of decide what mindset you're going to bring to the table. Are you a long-term holder or are you a day trader? And I promise you, it's going to be a lot easier for your stress levels. And if that stress level is of being in those markets, crypto is the most volatile asset there is. There's other things like indexes and mutual funds and Vanguard accounts. There's things that you can invest in that kind of take the worry away, that you can be nice and steady without having those panic attacks. So I think that will be possibly a solution for some people. So, but getting back on topic here, the best way to combat these swings is to have a range that you're going to buy in. So, for example, let's say I'm not going to buy anything above 15 cent, right? So if it's 15 cent and lower, I'm going to buy if you get paid every 2 weeks, every week or something like that, I'm going to buy this much this often, as long as it's below that. Anything above that range is going to be profit for me, and I will decide when I'm going to take that profit. Right. The thing is, people normally just buy based off of emotion. So they have some at 6 cents, some at 10 cents, some at 20 cents, some at 25. And they're basically what they're doing is they're buying all the way up. Right. And so it's difficult for you to be in profit because you're chasing the current moving average. You're chasing the current price action. It's difficult to be in profit if it goes up to 30 cent and you're so locked in as far as, oh my God, I'm going to miss the boat, instead of accumulating at some of those lower numbers or having a range that you're now immediately average up to 30 cent. So now you need it to go to 60 cent just to make just to turn a profit, right? And then when it goes to 60 cent, of course, you're buying that too. And I think that you can have those ranges and just kind of say, okay, I'm going to structure my portfolio. I'm going to be long term. My coins that I buy, I'm not going to buy anything over 15 cent. And anything that I do buy above 15 cent, that's going to be separate from what I want to take profit from. That's going to be my long term, let's see where this goes, my Hail Mary account. And even if you go look at some of my older videos when I was doing stocks, I always had some of those, because you don't know, it's difficult to time where the top is. You can be wrong about where the bottom is. You can be wrong about where support is, where resistance is, and you can definitely be wrong about the top. It is very difficult if there's one thing that is extremely difficult to chart, is momentum and catalyst. You cannot put that in a chart, and wherever if you say it's going to go to $1 and that thing gets running, it's probably going to do double that, right? You can't chart those things. So those Hail Marys, those that separate account where you say, okay, well, I'm going to lower my funds as far as how much I'm investing. I'm going to buy X amount every couple of weeks, and that's going to be a separate stash. I'm going to hold that for 2 years or whatever. Understand that, have that conversation with yourself, build that plan, and stick to it. It'll relieve a lot of the stress that's going on as far as the putting in there and then chasing that moving stick. So and that can be any range. That's a conversation you got to have with yourself. That amount, that's a conversation you got to have with yourself. But it's one that needs to be had because what going into this, because I said I was going to be more vocal this bull run than I was last run. I wasn't. Last run, I would make like one video a week, and I would keep a lot of things to myself and my opinions to myself. And I want it to be more vocal so that the community isn't necessarily being caught up with like hype and like hopium going forward. And I wanted to make this video just to kind of just put some ideas out there for some structure to your portfolio. Because those of you that have been with me for a while, you know that when we started, when initially before the run and the interest changed in the community, I was posting day trades and my stock plays, and we did very well in the COVID time. So, and I really want to kind of draw that bridge between the structure that you have to have in the stock market and building that structure in the crypto, because crypto for the most part is still very emotional with the traders, and I want to kind of establish that base there so that we're all in good positions and we stay in good positions. Again, I'm really proud of everyone for the most part being in green even at these levels. And I want to make sure that we are doing the right things and being more organized going forward so that we stay in the green, because it gives you more options, right? And this is one of those times where you can absolutely increase those positions with less worry of the after effects or what's going on in some of the macros. I know we're going to probably have some interesting things develop here with the macros and the Fed here that I'll be covering soon. So all this is actually providing a window here. And if you look at history, it's done this many, many times. You'll see those pullbacks. We take a look at some of the older Doge charts. They all show similar things when they have these several pullbacks, and everybody 80%, 90% wait until the actual parabolic movement to get in. If you've made it this far in this video, if you've been investing and being strategic, you're a part of that few percent that organizes and gets in early, right? The people that come in a bunch later or around the parabolic movement, they're going to have to reorganize and do it very quickly at a later date. So I am going to take a look here and pull my chart back up. Okay, so I'm going to take a look here one more time at the charts and the actual shorts, because I'm doing something now to kind of compare the overall volume that we're seeing, because I don't believe that we're seeing a big sell-off with the community. I believe more so this is like shorts and options doing a lot of this. I'm not seeing any big sell-offs with the community. I'm going to keep tracking wallets and see if I can come up with something. But so far, when I checked a few hours ago, I'm not seeing anything significant. Shorts are up a little from 972 to 1,004% today. So, and this is just this isn't all inclusive of the short. So I'm pretty sure it's probably more than this because we're only looking at one platform. So let's kind of keep in mind that this isn't necessarily real price action that you're seeing. You'll see people take these positions and try and use this as momentum to get the coin down. And, you're long, you can use that to your advantage. If we compare this to Bitcoin, I do believe Bitcoin, in my opinion, I think this is probably a good low for Bitcoin, 58,000. I have this range open, and I'm expecting Bitcoin to kind of swing in this range if we're doing historics. So even for Doge, I would love to see it around this range as well, probably like around the 12 range, in the extreme, maybe 10. But again, with the amount of the community that's in the coin, we have to kind of keep that in mind that the wallets are growing faster than about 90% of the coins that are in top 10. So when you do that, you start seeing these parabolic movements of these pushbacks where things we have this push down here, and the next day that dip where we have 87 million coins dumped, and the next day they're bought. So you don't know where that's going to actually happen at. So that's just one thing to kind of keep in mind here. You can't time it. Just kind of know that this window is open, and these numbers, 15 cent, 18 cent, they're all in play. They, like kind of like what we're doing right now with 12 cent, even though we didn't stop there on the way up, it's still in play. So this range here from wherever we go to 15 and the 18, consider that like a slingshot. Like those gaps, the same way we gapped up here and we have these big candles, those big candles flip. The same way we had those big candles here and they flipped red, they flipped green. So I can't stress this enough. Don't think that you can kind of time it and catch the candles here and say, okay, well, when it reverses, I'm going to catch it. Very difficult thing to do. But if you do, more power to you. Good luck. So we'll kind of keep that in mind here. I think that will do it for this video. I didn't mean necessarily. I hadn't planned to go on my my rampage here and then kind of do like my lecture. I typically try and have a mixture between charts and like lessons and stuff. So this video is a little longer than I wanted, so I will conclude it there. I'll do any updates that we have possibly later tonight. And with that, if you found value in the video, consider subscribing to the channel. We're going to hit 100,000 subscribers this year. So if you appreciate no fluff and sound information, make sure that you are in that number. If you have any questions, comments, leave it in the comment section. I'll get to as many of you as possible. And I will see you guys in the next video.